Are you tired of the endless cycle? The euphoria of a winning streak, followed by the crushing despair of blown accounts? What if I told you there's one habit, just one, that if you truly fix, will fundamentally transform your trading for good? Stick around, because this isn't about some magic indicator. It's about something far more powerful, residing entirely within you. Welcome, fellow traders. I'm your channel name, and for years, I've seen countless traders with incredible strategies, brilliant market analysis, yet they consistently fail to achieve consistent profitability. Why? Because the biggest battle isn't against the market, it's against ourselves. We're bombarded with information about technical analysis, fundamental data, complex algorithms, but very little focus is placed on the one thing that dictates our success: our trading psychology. Today, we're diving deep into that critical aspect. We're going to uncover the single most destructive habit that plagues most traders, and then, more importantly, I'm going to give you the actionable steps to fix it forever. So, what is this elusive habit? It's not overtrading, though that's a symptom. It's not chasing losses, though that's another symptom. The root habit, the insidious foundation for almost all trading errors, is a profound lack of structural consistency driven by emotional leakage. Think about it. Did you enter a trade because it fit your plan, or because you felt FOMO, fear of missing out, as the price spiked? Did you hold a losing trade too long, hoping it would come back, driven by fear of realizing a loss? Did you size up your positions after a few wins, driven by greed and overconfidence? This emotional leakage, letting your feelings dictate when and how you trade, is the one habit you must fix. It destroys your structure and erodes your edge. Fixing it isn't about feeling less, it's about building a robust system that contains and isolates those feelings. Phase 1. The mindset shift, accepting the probabilistic game. The first step in fixing this reactive habit is a radical shift in your trading mindset. You must stop viewing trading as a deterministic activity, where you are right or wrong, and start seeing it as a probabilistic game. Rule 1. Your edge is only in the long run. Every trade is just a random event from a statistical standpoint. You are simply playing an excellent strategy that has a positive expectancy, say $E greater than $0, over a large sample size, $N. Rule 2. Stop seeking validation. A single losing trade doesn't mean you're a bad trader, and a single winning trade doesn't make you a genius. The market is indifferent to your feelings. When you accept this, the emotional sting of a loss diminishes immediately, starving the impulse to get back at the market. Actionable mindset tool: pre-mortem analysis. Before every trade, write down 3 things that could go wrong and how you will react to them without deviating from your plan. This forces you to accept the risk before the emotion hits. Phase 2. Emotional discipline and the power of structure. If the core habit is emotional leakage, the core solution is rigid structure. Emotional discipline isn't about suppressing emotions, it's about preventing them from ever reaching the control panel of your trading. The trading plan is your emotional firewall. Your plan must be a step-by-step, mechanical blueprint that dictates every action. 1. The setup. What are the exact criteria for entering? E.g., price must close above 200 EMA, RSI below 30. 2. The entry. Where is the precise entry price? 3. The exit, take profit. Where is the mechanical target? 4. The exit, stop loss. Where is the stop loss, and it must be placed immediately upon entry. The golden rule of execution: if a trade setup doesn't meet all your criteria, you do nothing. If you are in a trade, you only follow the predefined exit criteria. If you break this rule, you have allowed emotional leakage, and you must step away from the screen immediately. Pro tip: use pending orders. To eliminate impulse, use limit or stop orders for your entries and stops. Once the order is placed, you are technically out of the decision-making process. The computer is now trading, not your emotional self. Phase 3. Controlling fear and greed with ironclad risk management. Fear and greed are the 2 primary fuels for emotional trading. They manifest as the impulse to cut winners short, fear, or let losers run, fear and hope, and the impulse to over-leverage, greed. The only number that matters, your R multiple. Risk management is the antidote to both fear and greed. The $R in R multiple stands for risk. The most important rule in trading psychology is: never risk more than 1% to 2% of your total account equity on any single trade. If you risk 1%, even a streak of 10 consecutive losses only depletes your account by 10%. This mathematical insulation is what calms your fear. You know your account is fundamentally safe. Greed control. When you are making $2 R dollar or $3 R dollar, twice or three times your initial risk, your profits are automatically scaled and defined. You aren't chasing $10 Brazilian reals. You are systematically banking small, sustainable gains. Fear control. If you risk only 1%, when the trade moves against you, you know the maximum damage is fixed and acceptable. This prevents the panic exit or the disastrous holding of a losing trade. Actionable tool. The risk first checklist. Before pressing the execute button, you must confirm. 1. Position size. Is my size calculated to risk exactly 1%? 2. Stop placement. Is the hard stop in place? If the answer to either is no, you wait. Phase 4. Cementing the fix, consistency through review. Fixing the habit of emotional leakage isn't a one-time event, it's a commitment to consistency. Consistency is simply the repetitive, mechanical application of your probabilistic strategy and your rigid risk rules. The single best tool for building consistency is the trading journal. Your journal must be behavioral, not just numerical. Trade details, entry, exit, R multiple achieved. The numbers, emotional state, the key. Before you entered, what was your emotional state? E.g., felt confident from yesterday's win, a little rushed. Compliance score. Did I follow my plan perfectly? Yes or no? Lesson learned. What did the trade teach me about my behavior, not the market? The weekly review. Schedule 30 minutes every week to review your journal. Focus only on the compliance score. If your consistency score is below 90%, you know the problem is your emotional leakage, and you must tighten your rules. You will quickly see that your biggest winners are always your most compliant trades, and your biggest losses are always your non-compliant, impulsive ones. This data will train your brain to value discipline over excitement. So, let's bring this home. The one habit you need to fix to change your trading forever is the lack of structural consistency driven by emotional leakage. You stop the leakage by 1. Mindset. Accepting the probabilistic nature of the market and taking accountability for your process. 2. Discipline. Building a mechanical, unchangeable trading plan, your emotional firewall. 3. Risk management. Implementing the ironclad 1% risk rule to nullify the power of fear and greed. 4. Consistency. Tracking and punishing non-compliance in your behavioral trading journal. The market rewards discipline and consistency, not talent or intelligence. You have the strategy, now you must master the operator, yourself. Start today. Implement the 1% risk rule on your next trade, write your plan, and log your emotional state. That is the first step toward fixing the habit that will change your trading forever.